Hello, today we are joined by Curtis Nelson from Boss Realty Group. He is the owner and founder. Um, so, Curtis, what made you want to start a real estate company?
Yeah, for sure. So my background really is I came from a very heavy construction background, construction family. Um, and I worked kind of as a carpenter over the years, and then I worked into the office and I turned into an operations manager where we really did design, build residential construction. And in that position, I had a lot of experience with real estate agents, bankers, lenders, appraisals, inspectors, designers. I mean, you kind of name it, but it really always boiled back to the first step when we met owners is they were buying and selling real estate, right? And that's how
Right.
it got them to the door of, okay, I bought a house, now I need to work on it, or I bought a piece of property, now I need to build on it.
Yeah.
And in that position, I just found that there was kind of a little bit of a disservice or a disingenuine and a kind of a bad rap on real estate agents. And that just kind of said, hey, they just come to the table, they make the connection, and they say, good riddance, give me my check, I made the sale. And after doing that for several years, I just kind of said, hey, there's got to be a better way. We need to have more experienced real estate agents. We need agents with kind of a better background that come from the building industry, that come from title, that come from inspections, appraisal, that just, that are active investors themselves. And I wanted to weed out the people that give real estate agents that, used car salesman approach.
Yeah.
Um, so about 3 years ago, I started the company, and I phased out of construction and phased into real estate. And we've just kind of, built this company that is geared around having very like-minded, strong individuals for real estate agents that really know what they're talking about and know what they're doing, and just, provide a very valuable service to our customers.
So, customer focused,
Yeah, so we're
client focused.
definitely very client focused. We're a small town, and almost I think everyone that works here is from very local or from a small town.
Right.
Um, and that, I mean, I definitely pride ourselves on that we say, hey, we're your agent next door, right?
Yep.
We know you. We hunt, we fish, we go to the park, we do community stuff together, and we're not going to steer you wrong.
Yeah.
So I really push on that, giving candid advice when needed, and just doing the right thing for sure.
Sure. That's awesome. So, what's the story behind the name?
Yeah. So the name Boss, BOS. Some people say Bose, some say BOS, but it's technically Boss. And the power behind that is, so my mother was named Cora Boss, and she was in a car accident several years ago, passed away. And ever since that day, it basically kind of changed my life to say, okay, there's got to be more. There needs to be something different. We got to follow through with our dreams and our ideas and our, kind of our goals. And, so there was a few years there where I, after she passed away, that I didn't start the company. But as soon as I started thinking about it and talking about it, it was kind of a no brainer that I wanted to pull
Sure.
her name into it, and kind of have that, that long lasting effect of she's still part of everything I do. And then it also, like, that name then really drives deep to the core of what the company's about, of, being there for your client, giving them candid advice, kind
Sure.
of following through with what you say, and really being, true and honest to your core, as well as providing good value to whoever you're helping.
Absolutely. I think that's one thing a lot of people look to agents to do, but a lot of agents fail to really either follow through or are sincere when they follow through.
Yeah,
And I think that's definitely something I think our agents kind of pride themselves on doing the right thing all the time, no matter what.
yeah,
So it's
for
not about
sure.
it's not about us, it's about the client. So
Yeah, and that's hard to do. And, and real estate agents are fiduciaries, right? And I don't know if everyone knows what fiduciaries are, but it's, it really boils down to that we are really supposed to be entrusted with our clients to act in their best financial interest, not
yep,
ours.
yep,
And when there's a sale on the table, it's hard to take, to take your mind off of that sale and say, okay, is this best for my client? Is this the right home for them? Are they making a sound investment? Are they, is everything they're doing the right time? And if it's not, every one of our agents surely is the kind of person that says, hey, this isn't right. Something is off. It's not the best thing for you right now. Let's keep looking.
yeah,
And
absolutely.
that's what I really like about the people we have working for us and with us right now, for sure.
Awesome. So there's a lot of questions, and a lot of buyers and sellers are all asking the same questions. Where do we think 2021 is headed?
Sure. Sure. It's going to the moon. That's where it's going.
Going to the moon. That's right.
No, that's a good question. And we talk a lot about it with probably a lot more with lenders and then a lot more with buyers, because sellers, I think if you're a seller right now, I mean, it's a good time to sell.
Oh, absolutely.
And sellers are really, I mean, you could argue it's a good time to sell whenever for a seller, depending on when you bought it. You could have made money in the crash. You could make money at the top, at the bottom, wherever you are. But for buyers, that's surely where a lot of people kind of get stumbled up on, hey, is now a good time to buy? How do I find my next house, right? Where do I go?
Right.
And, no one can probably really accurately say, here's where the market's going, without a question. I know what it's going to do. I know where it's going to be. I know where interest rates are going to, what they're going to do.
There's a lot of variables there.
Yeah. And I always tell people in that aspect that I refer back to a lot of times when you look at like the 2006 to really 2009, like that turmoil era, that was a really big dip. And in the low point of that, Polk County, Wisconsin really only had about 370 to 400 transactions that year. And when you look at what we did in 2019, Polk County had about 600 and I think my notes say 674, right? So we almost doubled it. And then in 2020, even, among the COVID and the pandemic, we were over 700 single family homes that sold in Polk County.
Wow. That's awesome.
Last year. And I think I really truly think, I don't think we're going to have more homes sold, but I think we're going to be very comparable to 2020.
Sure.
And then with interest rates being, still relatively low, and I think for the first time, they maybe even clicked up a couple points, or fractions, which that just kind of means home values maybe are starting to level off a little bit, because for the last few years, they've kind of, they've skyrocketed, but now, I think my prediction for 2021 is still a lot of inventory, higher priced homes, a lot of competition, but still a strong year for sure.
Yeah, with those rates still being, under 3%, it's people's buying power is, so much greater. So that's pretty awesome.
Yeah, for sure. And I know, in the office, we always talk about this and we look at examples of amortization rates and total interest paid. And, one of the last examples that we just looked at was when we compared a $250,000 house at about 4.5%, which would have been, really 4.5% or 4% would have been just a couple of years ago. We were at that point. And you say, okay, so my $250,000 house then might be worth 300 now, and that difference might scare people. But when you look at the interest rates of only 2.5, 2.8, that under 3, when you do the math and you look at those, the payment on your $250,000 house at 4.5% is about $1,260 a month, $1,300 a month. You take that same house now and you say it's $300,000 at 2.5%. That payment is actually only $1,200, so it's less.
So you're actually saving money, but your house is $50,000 more. Or
for sure.
Yeah.
Interest rate is a pretty significant factor, and I don't think people realize how much it saves on your monthly payment. You know, and even myself, like when I bought my house, I think I was at 3.8, and even in real estate, as the rates dropped, I didn't fully understand until I really got into it to say, okay, hey, if we can even lower it from a 3.8 to a 2.8, it saves me, a couple $100 a month in payments. And over the course of my loan, I mean, it's tens of thousands of dollars for sure.
Yep. We just did a refinance also, bringing it from, what was it? Like 3.8-ish to like 2.8. Yeah. And we took out some cash just to have as an extra, and then our payment was not affected. It was kind of crazy.
Right. No, it's for any buyers out there, because those are the ones that are the most skeptical about spending that extra money in purchasing a home. I encourage all of our real estate agents and all of our buyers to do that amortization schedule with them, to say, okay, hey, realistically, even if you spend $50,000 more up front, you're going to save 20, 30, 40,000 on the back end, just based on interest rate. So it's in your payment really probably is even less than what you what you would think it would be.
Right. So yeah, that's all interesting stuff when you start looking at the numbers and how the buying power of people.
Yeah.
So the next kind of thing I wanted to talk about was what do you think, or what are you striving to do as far as what sets Boss Real Estate Group apart from others? I mean, we are a local group. We're all local. We're smaller, so we don't have the big administrative stuff going on. It's just us as agents working for the clients. So from there, what do you think sets us apart?
Yeah, so I'll kind of break it into two categories. I'll try to do them really quickly. And so category one is what sets us apart with our customers. And I think you touched on it really good. It's just to say, hey, we're small, we're local, we're a boutique style brokerage. And we don't have the Keller Williams or the Diana or the Century 21 name, but all those companies now are such technology driven. That technology is accessible to the small guys like us. So even though we're small, our back end is the same exact technology as the big companies, which really opens our doors to say, hey, we can market the same. We can do the same searches. We can do the same networks. We can do the same promotions. So it really, it puts the little guy and the big guy on a even playing field in terms of resources, right? Which is huge for our clients, that then we can go into a client's house and say, hey, I know how to do the exact same thing as any of those big companies, and I'm going to do it on a local level where I know your name, I know your kids, I know where you like to eat, I know what you need for a housewarming gift. So it's really neat on that side. On the agent side of what we do different as a company for an agent is the idea that we've created a brokerage that's kind of like an a la carte buffet, where with these big companies, I mean, they're very successful, so you can't knock them, but they're a little bit more of an all or nothing, where when you join them, you get the full list of here's what you get it all, right? But you pay for it all. And as an agent or a new agent or a transitioning agent that's, in our smaller communities, they don't need 1 through 30. They mainly need number 1 through 5. And so what I do is I've essentially put all the resources up and say, tell me what you need, and then we'll provide only what you need. And then that's how we build our business, is to say, we fill your gaps in your personal business, and don't go crazy on it, because you don't need crazy. You just need the essentials.
Yeah, for sure. That makes sense. Providing the agents with the resources and tools we need to get the job done for our clients, but still retaining that local vibe. That's great.
Yep, for sure. Yep. And it's been working good. I mean, year one, we closed about 60 homes. Year two, we were at about 110. Now year three, our goal is about 225. And I mean, it's just, we have a really good program going, and you included. We have a great group of real estate agents that really go above and beyond for sure for our local communities.
That's awesome. All right. Well, thank you, Curtis, for jumping on the Zoom today. Much
Yeah, for sure.
appreciated. Just to talk about the Boss Realty Group. Thank you, everybody, for watching. Have a good day.
For sure. Sounds good. Thank you much.
Hello, today we're here with Al Nelson from Cross Country Mortgage. He has an office in St. Croix Falls. He has been helping buyers and people with refinances with real estate for 18 years now. He's a great local lender. I have worked with him many times. Al, so could you kind of go over the types of loans for mortgages?
Yeah, there's 4 different types of loans that we do when it comes to purchasing and or refinancing. Your traditional loan is it's called a conventional loan, Freddie Mac, Fannie Mae. You need 3 to 20% down plus to do a conventional loan. You'll have mortgage insurance if you don't put down 20%. The more you put down, 5, 10, 15, the lower the mortgage insurance goes. Then there's probably the next most popular loan we do is an FHA loan. That is a government loan. FHA, you need 3.5% down. You can do more. Also comes with mortgage insurance because you're not putting down a 20% down payment. FHA is a little more forgiving for credit score, higher debt to income ratios, and things like that. But you only need 3.5% down. The next 2 loans, the USDA and VA. VA, you need to be a veteran. It's no money down. The beauty of the VA loan is there is no monthly mortgage insurance. You don't have a mortgage insurance payment. So we like to do VA when we can if there's low or no down payment. And then another popular loan we do is the USDA Rural Housing. That loan is no money down. It does have income limits, meaning you can only make so much money depending on which county you are purchasing in. But that's a very popular loan. The mortgage insurance is very low on that. You need a little bit better credit score, typically in the mid 600s and up to be able to do the USDA loan. They're very limited on debt to income ratios also. But that's a great loan. It's lower mortgage insurance than the FHA loan. So those are the 4 different loans that we typically do.
So how does credit and credit scores play into a factor when someone is applying for a mortgage?
So we always, one of the first things we do when we take a loan application is I pick people's brains about credit. Credit scores are driven by your payment history in the past 10 years. It goes back 10 years and it looks at your payment history. It's one of the only ways that creditors can tell if you're a good risk or a bad risk when it comes to borrowing you money to purchase a home. If you've had a good payment history, you will typically have a good credit score unless you've maxed out credit cards that can drive down your score. But we can look at that, and sometimes recommend to people to pay down a credit card. Maybe you have a $500 credit limit and you owe $505 on it. That's really going to drive your score down because you're over the credit limit. If you paid that down to $100 or under, you're under 20% of your credit limit, and that would pop your score up within 30 days a lot. So yeah, and when it comes to credit cards, they're typically one of the best things for your credit, also one of the worst things. So a little oxymoron there, but credit cards are really good for credit. They help drive your credit up better than an installment loan. Credit cards would be revolving debt. Installment loans would be a car loan. It's good for your credit, but if you only had a couple of car loans on your credit, it wouldn't, you may not even have a score in the 700s. If you had 2 credit cards that you've had for 2 or 3 years that you've been making good steady payments on, no late payments, that would probably give you a credit score in the mid 700s.
So is it better to use your credit card a little bit, have some balance on there, to have them paid off completely?
Yeah, you know, it's okay if you pay them off. It's best to have a little bit of balance on there. What we don't know and you don't know is, when is the creditor report, what day does the creditor report to the credit bureaus? They report one day.
Sure.
There's 3 bureaus. There's Equifax, Experian, and TransUnion. They all have a different method of scoring. They're all getting the same credit history, but they have different scores.
Sure.
It's best to owe a little bit on your credit card, but keep that limit under 50% or even down under 20 or 10% if you can.
That makes sense.
Yeah.
So a lot of people ask or wonder about down payments for homes. Do you need a big down payment to purchase a home?
You do not. That's probably the biggest myth out there in our industry, is people wait. I'll be talking to people and they'll say, yeah, I just need to save some more money. I'll be ready to buy in a year. Well, right now, interest rates are so low. It's a great time to purchase. Your dollar's going to go a lot further right now with interest rates being historically low. So no, you do not need a big down payment. Like I said, we have a couple of no down. One of them, you have to be a veteran, which a lot of us aren't. But then the other one is the USDA rural housing. We do a ton of those. If you don't qualify for that loan, because it is a little bit tighter loan to qualify for, then we have the FHA with 3.5% down. There's a conventional loan, Freddie Mac, Fannie Mae conventional, that has a 3% down. That also has some income limits to it. But so you don't need a lot of money down. You know, your average home price around here, you probably need about $5,000-6,000 at the most to be able to, or less if you're buying a $100,000 home, you could get into $3,000.
Right.
Yep.
Yeah. Excuse me. So, what are the things not to do when applying for a mortgage, or let's say you've been pre-approved for a mortgage and you're working through a transaction, you got an approved offer and all that stuff? What shouldn't you do?
So a simple one is, don't go out and charge up your credit cards. Once we've got a picture of you, lenders always have to look at credit again right before closing. So just because your credit is good enough and you're approved today, pre-approved today, you go out and find a house, we start working on your loan. Sometimes takes 2 to 3 months from application to closing. It doesn't have to take that long. It may take 3 weeks if you find a house right away. But in that window of time, you could charge up your credit cards, make a late payment, open up new debt. I had somebody recently hit a deer with their car. They had to go replace their car, needed to get a loan. So they called me ahead of time. I recommend people do that. Sometimes, I mean, he had to get to work, so he had to go get a car. We looked over his credit. I told him what he could approve to still fit in his debt to income ratio so he could close on his house. So sometimes you have to do that, but it's best not to do any new credit pulls at all.
Gotcha. So don't add any more debt.
Correct. One of the things people get fooled on sometimes is they'll see an ad that they can go buy furniture with no payment for 12 months.
Right.
Or appliances, and they'll go do that ahead of time before we close. What they don't realize is they are applying for credit. Now you have a new credit pull. We're going to find out about that. And when they do that, there is no payment for 12 months. That makes it really difficult because now you have new debt. We have to prove what your payment's going to be. And that gives us and the borrower a huge headache right before closing.
Right. Yeah. That makes sense. Yeah. Back to rates quick. What are the mortgage rates right now?
Today, February 13th, 2020, 21. You know, your average 30-year fixed rate today is probably 2.75.
Nice.
Yeah, they're really good. Rates really driven on what's your credit score, what type
Yep.
of loan are we doing, how much money are you putting down.
Yep.
If we're doing a refinance, they're driven on how much equity do you have in your home, what is your credit score again.
A lot of variables.
Probably your average rate today that I'm locked just about every day is that 2.75 range on a 30-year fixed. You do a 20 and 30 years are very similar, usually about the same. You get down to a 15-year, 10 and 15-year rates are usually at least a half a point lower, if not a little more than that.
Gotcha.
Yeah, they're in the low twos. So
cool. Well, thank you. So last little follow-up here. Is there a benefit to choosing a local lender?
That's a funny, not a funny question, an interesting question, which I could almost turn right back to you because you've dealt with the, I don't want to mention names, but you see these big companies,
large lenders that advertise during the Super Bowl.
Quicken Loans, Rocket Mortgage, they are the same company. They will send out a pre-approval letter before they pull credit, before they verify your income. They'll just pre-approve you. If you read the pre-approval letter, which I have many times, they're very generic and have a lot of disclaimers in them. They're just saying, yeah, you're pre-approved, but you don't see the small print in it, but you need to verify your income, to all of that.
Yeah.
Yeah, I think there's probably one of the biggest reasons to use a local lender, other than even maybe somebody out of the Twin Cities. I've been doing this again for 18 years. I have local appraisers. I don't get to pick where your appraiser goes, but I have a pool, who gets your appraisal, but I have a pool of appraisers that when I order an appraisal, that appraiser gets assigned to one of the appraisers in my pool that I've been working with for years. They're local. They know this market as well as the real estate industry. And that's probably something people don't even think of, but is one of the biggest benefits of using a local lender, whether it's me or somebody else local. Yes.
Right, because nobody has any control over who that appraiser is going to be.
Correct.
But if your pool is a local appraisers, they really know the market that much better. That's what we're saying.
Yeah, you might have a Twin City lender, and I used to work down there. I still do mortgages in the Twin Cities. I'm licensed in both states, but their pool might be Minnesota appraisers come over here, and they just don't always know the market as well as a local appraiser would. And so you can run into headaches. I've had many times where a Minnesota lender couldn't get a deal done over here for one reason or another, and it gets sent to me and we get it done. I'm like, oh yeah, that's their excuse for not getting it done. I mean, that's a true reason, but for us, it's not a big deal.
Sure. I know for me, when I tell buyers, I recommend a few local lenders for them. And I primarily do it because I know you're going to pick up your phone.
Yep.
And I've had experiences with some of the larger lenders that when we call and we have a question, I've talked to 5 different people and I really don't know who is in charge of that loan. And it's just, they're moving me around to 5 different people to figure out an answer. And I'm like, it get frustrating for the buyers and myself and the sellers on the other side. So. Yeah,
I get that. Yep. I answer my phone from 7 in the morning till 8, 9 o'clock in the evening. I would say if I'm having dinner or something with my wife, I'm not going to answer the phone. Leave a message. I will call you back. So you'll never interrupt me. I won't call you that late. No, call me. You work during the day. I need you to work or you're not going to be able to afford to get this loan. So, it's okay to call me in the evening. I get it. You work during the day. Don't worry about calling me in the evening.
Right.
So, or weekends.
All right. We will wrap up. Hello, I'm here with Mark from Balsam Home Inspections. He has a combined experience of 25 years with real estate and home inspecting. Welcome, Mark. Thank you for coming on. What would you say the main things you look for when you show up to a house to do a home inspection?
Well, Ben, as you know, you've been in several of these inspections with me. Safe, sound, and secure are the big things. When I say safe, sound, and secure, I'm talking about electrical issues, plumbing issues, foundation issues, roof issues. The big safe things. Of course, we go through the whole house, room by room, step by step, but we look for the big safe, sound, and secure things because, as a buyer, you want to know that the foundation isn't going to crumble on you, or something like that.
Right.
So, safe, sound, and secure is the three big words that we use, and most electrical, plumbing, foundation, roofing, siding falls under that. So,
sure.
Okay.
Great. So, what's the biggest advantage for a buyer to have a home inspection?
Well, I think it's for their own knowledge of what the home condition of the home is. Because there's a lot of people that are first-time homeowners that know absolutely nothing about a house other than how to open the front door.
Right.
So I try to take as much time with a first-time homeowner as a veteran homeowner, showing them things like water heater, how to shut the power off, how to turn the water off, and stuff like that. So I just try to keep that in my routine for first-time people and veterans. So.
Sure. That makes sense. It's always good for buyers. I always encourage buyers to get a home inspection so they can have a good, well-rounded knowledge of what they're getting into.
Well, yeah,
because
exactly.
it's their biggest investment of their lives usually. So that they go in eyes wide open is what I tell them. So that's
and Ben, a lot of buyers go in and they'll take mom and dad with them or a contractor buddy, and they find stuff that isn't really pertinent to an inspection, like
sure.
These rafters aren't built to today's specs or something like that, but there's nothing wrong with the way they're built back in the day or whatever. So we look at it from an inspector point of view totally different than a contractor or somebody who thinks they're a contractor or something like that.
Sure, that makes sense. What are the most common things that you call out on an inspection? Like, what are the most common issues that you would see?
Well, again, as you know, you've been on a lot of these inspections with me. Smoke detectors and carbon monoxide detectors. I see so many of those in homes that they're either there and not working, or they're just not there at all.
Right.
So, and some people think that if you have a wood stove, you don't need to have a carbon monoxide detector. Well, that's not true. It's just like having a propane stove. You got to have one.
Yep.
And also, a lot of homes are all electric inside. They don't have any gas appliances, but they have an attached garage. You still need smoke detectors in your house because you have an attached garage,
Right.
So a couple of the other things I see a lot is outlets around sinks in the bathroom and the kitchen. They're not a GFCI, which is a ground fault interrupter type outlet, which if it trips right at the outlet, not back at the breaker box. That's another real common issue I see. They don't have the proper outlets around sinks, and if they do, sometimes they're old and they don't work properly. So I run into that almost every day of the week. That's something super common. Another thing I see a lot of are handrails going up steps to the upper levels or lower levels. Not just in older homes, but a lot of newer homes, people take them off when they're moving furniture up and down, so they can get their furniture up and down, and they never put them back on. Well, that's a safety hazard, number one, and it's something that can trip up a loan from an appraisal point of view too, if you want to have a handrail.
Right.
So,
yeah.
So it's important to have that stuff,
For sure. Especially those government-backed FHA, USDA style. They're gonna call anything like that on an appraisal. Yep. Right.
Exactly. That's one of the top things on their list when I go through. Like handrails and GFCI outlets, stuff like that. So.
And you know a lot of that from your experience in real estate. So that's.
Well, yeah. When I sold real estate, I used one particular inspector, and I usually went on the inspections with as much as I could, and I learned a lot based on that. So I've been on the real estate side of these inspections for many, many years too. So that really helped me out when I got into doing home inspections too.
Sure, that makes sense.
Yep.
So is there an advantage or should sellers get an inspection before listing, a pre-listing inspection, I guess we would call it?
I would say yes, Ben, and it's gotten more and more, I've seen more and more with this last year here, because of the shortage of homes, and it can help move an offer along quicker if you got an inspection done on it. And let's say you had 2 or 3 things that need to be repaired, and you repair them as the homeowner, like immediately, and somebody comes look at the house, the inspection report's laying on the table, says this was wrong, that was wrong, and the homeowner says, I fixed it, here's my receipts on it, or whatever, and it's fixed. That looks really good to a potential buyer. And then the buyer will have to have a home inspection and put a contingency on to slow down the offer process, as you know. So I think they're getting to be a little bit more important. And I'm doing a lot more of them this year than I've done in the past. So there's pasture, I should say. So I think it is very important, especially with the way the real estate market is right now. You know?
Yeah, I will say from experience that does move things along a lot quicker, because you don't have that, potential interruption of, well, we need, 2 weeks to get this fixed or something like that, because getting a hold of a contractor or somebody to fix a small thing can be very difficult.
Yep. So, if the homeowner has the inspection, pre-inspection done, well before they list, let's say a month before they list, it gives them time to get a contractor and get the repairs made,
right.
And that's kind of what people have been doing, and then just, it helps sell the house. I mean, buyers can definitely have their own inspection if they want to too, but
sure.
It just takes a little pressure off of a potential buyer,
Well, and then the seller's not caught off guard when an inspector does find something wrong. And more often than not, I mean, there's always something there's always something.
Even in these newer houses, Ben, there's something,
Right.
And you just have to expect that. So.
Right. So that's a good thing for sellers to know, that they can have an pre-listing inspection.
Yep, so. Absolutely. Yep. And it's the same inspection I do for a buyer after an offer. It's the exact same process. The same things get examined and checked and looked at, same form. They use the same inspection form on it and everything. So nothing changes other than it's done, pre-list instead of post-list, type of thing. So.
Sure. Well, that makes sense. Awesome. All right. Well, that'll call it for this morning. Thank you, Mark, for joining us. Again, Mark's from Balsam Home Inspections.
Okay.
And I will put his contact information on here. Thanks again.
Thanks for having me, Ben. It was fun.
And now a special presentation from Polk County Abstract about the titling process, closing process, and the importance of title insurance.
Thank you for joining us for this home buyers seminar brought to you by Polk County Abstract and Lakewood's Title and Closing Services. We have offices in St. Croix Falls, Balsam Lake, and Siren, Wisconsin. Polk County Abstract has been serving buyers, sellers, lenders, and realtors in Polk County and western Wisconsin for more than 100 years. Polk County Abstract is the area's only lawyer-owned, locally owned title company. Our staff includes attorney Susan Lee, Jean Sandberg, Christine Schwegman, Tara Roth, Taylor Durand, and Tracy Froker. The goal of this presentation is to educate viewers to gain an understanding of what is title insurance, the types of risks that title insurance can cover, the cost of title insurance, and other services a title company provides in a real estate transaction. Typically, purchasing real estate is one of the biggest transactions the average person in the United States will make during their lifetime. Without a title professional involved in the purchase or sale of real estate, how are buyers, sellers, realtors, and lenders assured there are not any issues that need to be worked out prior to closing? In general, the term title insurance refers to 2 different types of policies. An owner's policy of title insurance, which provides insurance to the insured owner listed on the policy, or a lender's or loan policy of title insurance, which insures the lender listed on the loan policy against covered defects for the life of the loan. Why would you need title insurance? Errors in the public records, undisclosed liens of prior owners, missing heirs, forged deeds, or other documents in the chain of title, fraudulent deeds, and improperly recorded documents are just some examples of the potential risks that can jeopardize home ownership, and this protection is good for as long as you own your property, all for a one-time premium. What does title insurance cost? In Wisconsin, the cost of an owner's policy of title insurance is on a sliding scale, depending on the amount of coverage that is being given, which is most often the sales price. The premium for an owner's policy in Wisconsin starts at $475 and goes up from there. Who pays for the owner's policy of title insurance is disclosed in the offer to purchase. That is the contract between the buyer and seller that sets out the terms of the sale or purchase. The premium for a lender's policy of title insurance for the purchase of a residential property starts at $375, and this amount is included in the fees your prospective lender disclosed to buyers in a loan estimate. Aside from the insurance policy itself, what else does the title insurance premium include? The premium includes the time spent searching the public documents, examination of those documents, and a compilation of the title commitment. When real estate is financed or sold, some sort of document or documents or record of the transaction is filed somewhere in public archives. Other matters that may affect ownership of that same real estate are also filed somewhere in the public archives. Liens, assessments, or other encumbrances are examples of matters that are often filed in the public records. When a policy of title insurance is purchased, a title company like Polk County Abstract will search these public archives and determine ownership and identify any issues that may affect the purchaser's or borrower's ownership. We search public records at the Register of Deeds office, the circuit court records, the Wisconsin Child Support Lien docket, the Federal Terrorist Database. We review surveys, search the real estate tax roll records, and we contact local municipalities to check on special assessments for items like street and sewer assessments. Once the search is completed, we will determine the insurability of title to the real estate and list any exclusions from coverage in a document called a title commitment. There are 3 parts to a title commitment. The first part, Schedule A, discloses the who, what, where, and how much pieces of the transaction. The who includes who currently owns the property and who will own the property once the transaction is completed. The what or where is the legal description of the property being sold. There often will be reference to a physical address as well on this Schedule A. The how much part of the transaction discloses the sales price of the property and the loan amount, if any, that the buyer is borrowing from a lender to complete the transaction. The second part of the title commitment is Schedule B1. This section of the commitment discloses the requirements that must be met in order for the title company to insure the transaction. The money must be paid to the seller, the title company must be paid for the premium, certain liens need to be paid, and certain documents must be signed in front of a notary public and recorded with the Register of Deeds office for the county in which the property is located. The third part of the title commitment is Schedule B2. This section lists the exceptions from coverage or the matters which the policy will not insure. This most often includes any covenants that affect the property, public utility easements that impact the property, future encumbrances created by the buyer, and so forth. Not only do title companies search the public records and issue title commitments, and eventually title insurance policies, title companies are often also the closing agent for the real estate transaction. This means the title company acts as an agent of each party to the transaction. In its role as agent, the title company obtains signatures on the closing documents and receives and distributes payments related to the transaction. After the parties have signed all the documents, the title company will record the documents that need to be recorded, such as deeds and mortgages, in the local county land records office. We hope this information has been helpful to you in understanding what is title insurance, why one would need title insurance, and the other ways in which the title company is involved in a typical real estate transactions. Any questions can be directed to us by email or by phone. Thanks for taking the time to join us today.
A big thank you to Polk County Abstract for giving us so much useful information when it comes to the closing process and title insurance. They are a very important part of the real estate transaction and make it all come together. Thanks for watching.